Students, welcome to Prudential Business. So, students, we were discussing with the chapter Financial Management. This financial management, we have already done two videos. In the first video, we have discussed about the introductory part of the chapter. That means we have discussed in brief about the various concepts that we will learn in the chapter. Right. In the second video, we have discussed that is in financial management part 2. We have discussed about the various roles and activities where financial management will be required. Right. So in this is the third video, and in this video we will be discussing about the objectives of financial management. Right. Okay. So here you see the first objectives of every financial management is wealth maximization. This is very important. Wealth maximization means what? See, the main objectives of financial management is to maximize the shareholders' wealth. See, the what comes here, shareholders' wealth. Whose wealth? It is the shareholders' wealth. And whenever we say it is a shareholders' wealth, we always refers to equity shareholders. Okay. Equity shareholders, usually in short we will be calling it as shareholders wealth, because the equity shareholders are those persons which are entitled to the residual amount of profits of a particular company. I hope this is clear to you. Next, let us proceed. Okay, so the main objective of financial management is to maximize the shareholders wealth, for which achievement of optimal capital structure and proper utilization of the fund is must. This is the main aim of every financial management for every company. So what does this entire paragraph tells us? This paragraph tells us that the major aim of every financial management is to maximize the equity shareholders wealth. And who are those equity shareholders? The equity shareholders are those persons which are called as the owners of the firm, which have the right to participate in every administrative activities of the firm, and those persons are the ones which are entitled only to the remaining amount of profits of the firm. Right? I hope this is clear to you. Next, you see, maximizing the wealth of the maximizing shareholders wealth, that is the owners, which are the only recipient of the residual income or the leftover profits of the firm. I hope this statement is clear to you. Next, you see, so when we say that the shareholders wealth is increasing, we can understand that all other claimants, including suppliers, bankers, employees, and other legitimate preferential creditors' wealth are also increasing. Here you see, equity shareholders are the last to receive the profits of the firm. If a firm makes profit, then first of all they have to pay to their secured creditors. Secured creditors means they can be your banks, right, or any other loans for or any other financial institution, right. And next it can come your preferential creditors, right, like your preference shareholders or debentures, etc., bonds. And third, it can come your various unsecured creditors, right. Unsecured creditors can be your trade credits, public deposits. Those are usually comes under the purview of unsecured creditors. And the last one will be the owners themselves. Those owners themselves will only be called as their equity shareholders, right, or in short we will be calling it as shareholders. So this statement tells us about this. So when we say that the shareholders wealth is increasing, we can understand that all other claimants, that means the person who are having a stake in that company, including suppliers, bankers, employees, and other legitimate preferential creditors' wealth is also increasing, right. I hope this is clear to you. So let's proceed about the other objectives of financial management. Number one, here you see, to procure sufficient funds for the organization. This is the next objective of financial management. First objective is to maximize the wealth of the owners or the equity shareholders, or in short we will be calling it as shareholders, right. Second one is to procure sufficient amount of funds for the organization, right. That will be coming under profit maximization, not wealth maximization. Wealth is after the wealth comes after the profit. That means if a company has profit, then only it can come from then only it can acquire wealth, or then only it can become wealthy. Okay, here you see, Adequate and regular supply of funds is to be maintained for smooth operation of the business. So this means what? If this actually tells us about the meaning of the word finance. Finance is not that the amount of money or the amount of cash. Finance means the particular amount of money when the business requires it, and from where it is going to acquire that amount of funds, right? So this is the second objective of financial management. That means to supply the firm with the amount of money that the firm wants. Okay, so that this will be the second objectives of financial management. First objective was your wealth maximization. Second objective is to supply the amount of funds to the firm to the extent that the firm requires that. Okay, next one, you see, to ensure proper utilization of funds. That means the investment decision will come here. This is an indirect word of the investment decision. To ensure proper utilization of funds. After the firm gets the amount of money, how properly it is going to utilize that amount of money. It is the third objective of financial management, right? And come to the fourth objective of financial management is that to ensure safety and liquidity of funds. That means the financial management ensures that the firm does not utilize the fund in some non-profit making activities or some any useless activities. The firm uses the amount of money in a right decision. It is the duty of financial management to oversee it. Okay, here you see the chance of risks in investment should be the minimum as possible. Okay, come to point number 5. To meet the financial commitment with the creditors, financial management ensures that all creditors are paid on time. If a firm properly executes financial management, then the riskiest people, which is called as the equity shareholders. Usually the equity shareholders are the owners, and whatever amount of money they contribute to the firm, that amount of money is for the equity shareholders is one of the most riskiest. Why it is the most riskiest? Because the firm is under no obligation to repay the amount of money to them, back to them. If the business does not make profit, then the wealth of the shareholders or the equity shareholders will be finished. The firm will not repay the amount of money since they are under no legal obligation. That these statements tells us that to meet financial commitment with the creditors. See, equity shareholders are also a creditors of the company. Even they can be called as the owners. They are contributing money to the firm, and it is the duty of the firm to repay back the amount of money. That is why those are also your creditors. Now, financial management, what it ensures that all creditors are paid in time. Not only the equity shareholders, but also the preferential creditors, and also the secured creditors, like that of your bankers who supplies loans to your company. Okay, so I hope this is clear to you. Next, you see, so those are the primary objectives of financial management. Now, when we say that the profit maximization has been achieved, then we should be clear enough, we should be of confidence that these types of activities are also met. That means maintenance of liquidity. If profit maximization is ensured in a particular organization, then the firm will have enough number of liquid assets with their hands. Okay, liquid asset, that means they can pay any amount of creditors, they can pay any amount of required money to the suppliers, because they have got enough number of money or enough number of cash, not only in their hand but also in their bank. Next, you see, meeting financial commitment with creditors. If a firm has got enough number of liquid cash with their hand, then whatever the financial commitment with the creditors are there, so creditors will be coming on, not only your equity shareholders, not only your suppliers, not only their loans from the banks or the bankers, all types of creditors are paid on time if profit maximization, which is one of the objective of financial management, is achieved. Okay, and next is that proper utilization of resources. Resources, that means here resources will be of two types. Number one will be your human resources, and number two will be your all the monetary resources or material resources. Okay, human resources will be the amount of employees that they have, and other resources like that of your machineries or your amount of funds that they have. All those things are being maintained properly if a firm has the objective of profit maximization, which is one of the division of the financial management. Okay, I hope this video is clear to you. So in the next slides we will be discussing about the various types of financial management, like that of your financing decision, your investment decision and dividend decision. So please stay tuned with Prudential Business. Thank you so much.